Good afternoon, everyone. This is Henry, and as we look at the market for tonight's video newsletter, the selling continues, right? You had a market that traded up a little bit for today's session, but ultimately bears are still well in control. And I wanted to give you 3 things that may help you time when the market is ready to bottom. Now, I'm not saying a bottom for a new high. I'm saying a tradable bottom. Something that comes down to a very similar situation like what you saw right here, and you get 7 to 10 days where you're not going to want to be bearish and there is better opportunity to the long side, and I think that is waiting in the wings. Now what that could look like tomorrow is a push down into 56.56. This is part of the Voodoo Line study set, one of the favorite things that I study from my buddy David Starr, and I think that it's an important level in the index. So if tomorrow gets down there in a sharp fashion, I think we could rebound from it. If Friday is instead, let's just say quiet and range bound, well then I think you reach down there and grab that number on Monday. So again, just note the level should stick out to you, a little symmetry in price, right? 5.6, 5.6, but focus on that. If it can tag and hold, it could be an important reversal spot. Now, if that is going to work and that level is going to be bouncy, the other 2 things that you want to see, and of course the S&P could be at lower prices when these things happen, but watch for the put-call ratio, and this will take longer for the moving average, but watch for either of those to be above 1.0. Now 1.0 does not again necessarily make the bottom, but those are usually moments where the market looks very bearish. The wide array of participants see that, and so much more puts being bought, a well-hedged market doesn't crash, and that's what that put-call ratio could infer. So wait and see if we get it, but could be an important piece of Friday and Monday. And then finally this chart of the VIX, which in the same way for the SPX into lower targets, the VIX wants to take out this previous swing high at 28.32. So can that be done tomorrow? It's really kind of a unique spot where I think it would be a little cleaner to do it on a margin call Monday kind of move. So Friday's volatility is elevated, doesn't give anything back, but the real capitulation doesn't hit until Monday. Then the VIX spikes, everything gets flushed out. We'll see exactly where that ends up on the SPX. But if those 3 kind of things came together, that would be a spot I think we could start trying to sell put premium for the March options expiration. And again, I'm just taking it 15 minutes, 1 day at a time, but that's my framework, and I wanted to make sure that you were aware of it. So I hope it helps. Have a great rest of your night, and I hope to see you in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.